Okay, good. All right then, welcome everybody to this meeting of Transport for the North Audit and Governance Committee meeting on Friday the 25th of Feb. If I could just do welcome and apologies first, if I could welcome everybody to the meeting, and I believe that we have no apologies for the meeting, so we can move forward on that basis. Thank you. Next item 2, is declarations of interest. So if I could just ask members to declare any personal or prejudicial or disclosable pecuniary interest that they may have relating to items on the agenda and state the nature of such interest. I'll just pause there if anybody has anything to say about that. No, no declarations for the minutes, thank you. All right, before we move on to item 3, I just wanted to advise everybody that this will be my last meeting as chair, and we'll be looking for item 10 to just advise members how the process will proceed from here to re-elect a new chair to replace myself. I also wanted to take the opportunity here to say goodbye to Ian Craven, Finance Director. This will be his last meeting, and to thank him personally for all the work he's put into making the Audit and Governance Committee successful down the years. So thank you, Ian, for that. I'd also like to just mention that taking over from Ian will be Paul Kelly, who has been appointed as Interim Finance Director. So congratulations, Paul, and well done. Okay, so that hopefully brings us up to date with membership. And if I can now take us to item 3, minutes of the previous meeting. So if I just take us through that. So going to page 1, any comments or changes? No. Page 2, 3, 4, 5, 6, 7, and 8. Okay. Any changes at all? No, I think we can take those minutes as read. Thank you for the minutes. Thank you very much indeed. Okay, if we can move on now, please, to item 4, monthly operating report, which is the January 2022 report. And I think, Ian, you were going to take us through that.
I think Paul take members through it, and also touch upon some of the funding developments that have taken place over the last couple of weeks as well.
Okay.
Yeah, as Ian said, obviously we've got a standing item of the latest monthly operating report that gets issued to the committee. We take the paper as read, but not intending going through line by line. But we thought it would be useful just to possibly highlight on or to focus on maybe the financials, just to refresh people's memories, because we don't have a financial report coming to this committee at this point. That being one point, and then the second area that I'd like to emphasise is to bring the committee's attention, if they're not already aware, of the funding settlement that was announced although we were received on the 14th of February. I probably would like to dwell a little bit more on that, because I think it's got more interesting and far-reaching implications than possibly the financials that January have. But I'll just share my screen if that's okay. So with the back end of the monthly operating report, there's a financial summary and a HR summary. What members may well notice is that we report against revision 3. So revision 3, we reforecast our budget on a quarterly basis, and then we report against the revision. The main reason that we do that is to strip out some of the larger variances that would occur, and then we don't end up reporting against them on a regular basis. The main difference between what was the original budget and the revised budget centres essentially around the MPR programme. With the IRP was when we budgeted over a year ago, we thought the IRP was imminent, and then each month and quarter after that, we thought it was going to arrive, and then eventually, when it did arrive, it arrived in I think it was the 18th of November. So there was an element of uncertainty. So we started the year with a level of contingency within the MPR programme that then got lifted out at Rev 2, and then at Rev 3, it got the budget for MPR got subsequently reduced even further. So, but I suppose the point to focus on with the MPR programme is they are ring-fence budgets. So to the extent they're not spent, they go back to the department, as is the same with the IST grant. A ring-fence grant, and again, that's a project closure grant. So again, I mean, there's a very modest variance to date of 0.02, but we had a very good understanding with the department that they provided us with a sum of money to meet all the closeout costs, and to the extent they're not what they were envisaged to be at the start of the year, then it would just mean we return the funds to the department. And that's worked very, very well. And again, we are endeavouring to push that same relationship that we had on the IST programme with the TDF programme and the closure of that programme at the end of the year. Parking the IST grants and the MPR grant, sorry, the IST and MPR cost lines, we then go into the remaining lines. The remaining lines are predominantly core funded. IPBA is a core funded budget. Broadly, half of the rail operations is core funded, which is the strat rail element. The other half is funded through grant, RMP grant, which is a ring-fence grant, and then the whole of the operational area is core funded. A lot of our focus is on core funded budgets because to the extent they're not spent, they replenish reserves or support the reserves. The reasons why they're not spent is there might be activities that are committed but slip into the following year. So again, that's mainly just a movement of reserves, really. The commitment is there and it's just met in the following year. But it does give us a degree of capacity, which we can come on to when we talk about the budget allocation going forward. What we did at all revisions of the budget was that we retained the core funded budgets, which was quite a critical act to take, because again, it's what we wanted to do was demonstrate the ability to set plans and deliver the plans of the activities within the plans. And to the extent that if there were areas that couldn't be delivered for whatever reason, then we had the ability to replace or consider them through the environment process to replace with different activities that underpin and support the business plan. And I think that was an initiative that we probably introduced this year for the first. Well, in fact, we did introduce it this year for the first year. And it's quite effective. We probably introduced about £500,000 worth of incremental activity that was funded from earmarked core funded budgets that were within this year. So effectively, it's activity that couldn't be delivered for whatever reason. It was replaced with activity that underpinned the business plan. In terms of Rev 3, Rev 2 and or Rev 1, we maintained those core budgets, which was a strong message that we were sending to the department that said, we've got a core allocation and we will commit and we will spend it. So that's the essence of the reporting. There's probably not a huge amount of variance because we're reporting against Rev 3. But again, even we report against the original budget, there wouldn't be that much variance because the core budgets are effectively the same as they were at the start of the year, albeit with a slight mix in between individual lines. Moving on to this is the funding allocation for 22-23. So earlier in the week on Wednesday, there was a board meeting where this paper, which I'll show you elements of it now. It's a public paper, so it's available on the website for people to review and read if they see fit. And I would actually encourage people to read that because it is quite an interesting and informative paper that frames the environment that we face going forward. So this paper was submitted. What the table that we have in front of us shows. On the right-hand column is for 21-22 is broadly our funding allocation. It was our funding allocation that was agreed a year ago with the department on the 3rd of January. The 3rd of January becomes important, and as you'll see when I reference when we got the allocation or the recent funding letter. In fact, it's highlighted in the paragraph above, which is the 14th of February. The middle column was the CSR submission. So again, we've just lifted off the first year of that. It was a 3-year submission. and we requested £10 million a year for 3 years, which would have underpinned our activity going forward. Obviously, when we submitted the CSR in September, that was pre the IRP publication that occurred in November. But what we had built into the CSR was an understanding that if the IRP did get published and the MPR programme was to be removed, then £10 million was a good proxy of what we would require to maintain the business. So that was a 3-year request, £10 million a year. And then on the 14th of February, well, actually, I suppose the period between the CSR and the 14th of February, we spent a lot of time chasing the department for a better steer on allocation. And I would say that we were probably, we weren't that successful, because I think, again, they were unable to tell us. It required ultimately a buy-in from the Secretary of State, and the letter from the Secretary of State arrived on the 14th of February. The allocation that was granted in the letter was 6.5 billion of core funding as a 1-year settlement, and then a ring-fence grant to support the TAME modelling function of 1.5 million. We also chose to capture on this table an incremental grant that was granted in year, which was 336,000 for, at the back end of last year, the department wrote to us and said, well, is there any way that you could embark on a number of activities in certain areas that would support various initiatives, and we submitted a bid for about 800,000, and we were granted 336. So again, that's a ring-fence grant that will get spent next year. In terms of the allocation, I genuinely, as an individual, I was disappointed. We pitched in for a higher number and for a 3-year window, and we got a lower number for 1 year. So that's where I was when it arrived, and I think it's fair to say I was disappointed. But by the same token, you've got to take what's given and move on. So the real focus, from the 14th of February is how do we manage the process going forward. So the 6.5 billion of core funding contains an element of grant which is to fund co-sponsorship. So the department assessed it as being 400,000 to fund the co-sponsorship of the MPR programme. That's gone from being co-cliented as we are today. So for the 1st of April, it will be co-sponsored. So that leaves about 6.1 million pounds, which on face value you can say is an increase from the 6 million pounds that we were granted in 21-22, but it's a relatively modest increase, and the effect of inflation more than eliminate that increase. So if one could argue it is a decrease, but in real terms it is an increase. It creates challenges. So what we are into now is making the activities that the business is going to conduct for next year fit within the funding envelope that we've got. So we're in the middle of a business planning process now that is paring back the activities to align with the core activities of the business that have been agreed by the board, with the view of pulling together a business plan that we would able to then resource and cost that would see us then compiling a budget for submission. Because of the allocation not being received until the 14th of February, it's quite late to go through a robust business planning process. So we've agreed with the board that we would go forward and submit a Q1 budget based upon our existing run rates, with a very clear plan that sees that cost profile, which is predominantly staff-based, reducing or stepping down at the end of Q1 or before. And with the view then, so we would submit a Q1 budget, and the view is that during Q1 next year, we would then be clear as to what the revised activities and cost base were, and that would enable us to do a full year budget in Q1 for submission and approval by the board at June. What else came from that? So what's not in here is and it's in the notes, is the department also continue to support the Rail North Partnership. There's a separate agreement in place for that sees they would have to give us 12 months notice to cease that arrangement, and there was no intention to cease that arrangement. So again, that's encouraging. If anything, actually, it's slightly increasing. But again, it's a separately ring-fenced grant through the department. I've cantered through that pretty quickly. I suspect that, well, I think there might be more questions on the grant and the funding allocation going forward than the financials, but happy to take any questions on any of the areas.
Can't see any questions, Paul, at the moment. Any questions from anybody? No, I think everybody's clear.
Councillor Heather Scott.
There's a couple.
Yes. Paul,
Okay.
can you turn your screen share off, please?
Yeah, it's not really a question, it's a comment. I think we were obviously all disappointed with the allocation, but I think the good news is that at least the Rail North partnership is continuing for at least the next year, and hopefully that will continue into the future, because I think that's another important a part of what we do. So yes, I think we're all extremely disappointed.
I think the positives, Rail North partnership would continue. The TAME modelling function, which was the large element of that supported the NPR programme, the department are keen for us to continue that for 1 year, and the funding letter, can be read many ways, and but we read it as being prove yourself in this year, and we would continue to support, if not further support you in other activities. So there are some positives, but again, we shouldn't underestimate the challenge that we face to make the activities fit the funding allocation.
Kevin, did you want to come in?
Yeah, it's just a couple of points of clarification, Paul. In terms of the 400k for the co-sponsor role, is that ring-fenced? Did you say it was ring-fenced, or is that just a sort of a notional expectation from the department? And then a sort of second sort of query around the core grant 1.6% uplift. That's likely to be wiped out, though, isn't it, by inflationary, by some margin, I would have thought, given the direction of travel at the moment and economic sort of predictions that's going to carry potentially into 24. So I just wondered what the likely impact is on staffing, really, and capacity, because that suggests to me that it's effectively a real-time cut.
Yes, inflation running at.
Is it worth showing that? Is it worth putting on the screen the table that's further down the report?
Yeah, I'll just share this. I'll just drag this up and show the screen. Yeah. But Kevin, in relation to your first question about the 0.4 co-sponsorship funding, that's an assessment that was made by the department, but it's a core funding allocation. So, they've said that they believe, it could cost approximately 400. I mean, I think the likelihood of it being significantly higher might be an interesting challenge. I think it will be a very good outcome for us if we could try and accommodate a solution that was partially already in the building, but again, it really depends on how we shape what we want to do from that arrangement, and how we want to influence it and affect it. It could be quite an active interface. I think because of the nature of the subject, it's going to require some quite senior level engagement, just because of the people that they're engaging with. In terms of the 6.1% that you said, Graham, yes, it is. It's a 1.6% increase, and inflation is running at, it could be anywhere between 5 and 7%. So yes, from a real-time perspective, it would be a reduction. What this table shows here is that, based upon a degree of cost pressure, and we factored in a figure of initially 5%, then 2.5% going forward. What this shows, it shows the shortfall between projected activity and projected funding. So it's showing quite dramatic cost reductions or activity reductions that are required to make the position work and balance. There is envisaged to be a reduction in personnel. There's going to be a reorganisation. So the business planning that's presently being conducted will then be resourced. So the implications of what we intend to do, and then how do we do it with the people that we've either got or if there are considered to be too many roles, then either voluntary redundancy or possibly other mechanisms would be employed to reduce the workforce. So it's quite a step down. I think where it becomes really interesting, Kevin, and you probably may recall a year ago that when the in-year funding was reduced from 10 million to 7 year, this is about a year, well, it was a year ago, and then they reduced the funding for this year to 6 million, and the basis for that was that the reserves were considered to be, heading a little bit too high, and I think you could argue a year ago it made sense, but we were able to mitigate that with positioning costs into the MPR programme and the use of reserves. But once you've used reserves once, which was that in column 1 under 21-22, we used £2.5 million worth of reserves in that year. Having used £2.5 million in this year that we're in now, it doesn't leave too much incremental reserve to apply in future years, while still maintaining a minimum level of reserve going forward. And note 1 below the table articulates that, which says that using £500,000 a year from reserve release allows you to get it's a quasi grant effectively. It's a release of historical grant, but it still means your total funding is only £6.6 million. So again, it's showing a dramatic reduction in costs that are required to make it work. Does that help or bring it to life a bit more, Kevin?
Yeah, that's really helpful, Paul. Yeah, no, that's really helpful. Actually, the audit completion report touches on the risk around the reducing reserves, doesn't it, later on in the agenda? Yeah.
And yeah. I mean, what's not in this table is that obviously I think it's fair to say that there will be a reduction in personnel. I'd be surprised if it wasn't, and that the cost associated to that reduction hasn't been factored into that reserve release. So, whether it's done in the back end of 21-22 or 22-23, depending on when it occurs, that will require there will be a cost associated to closure, or to the transition to the low workforce that will also need to come out of the reserves. So whilst this is projecting a 2.7 million reserve at 24-25, once we factor in that transition cost, it's likely to be substantially lower.
Thank you.
Yeah. There's a lot there, but I suppose if that's the original point, disappointed, but we need to move on and we need to deal with the hand that we've got.
Thank you very much, Paul, for that. Are there any other questions on this particular item? Bear in mind, we've kind of focused on the finances, but the operating report obviously is a lot wider. Are there any further questions on the operating report? I can't see any. Paul, are you happy to leave it there, or is there anything else you want to say about the operating report?
No, nothing else. But yeah, also if anybody has any questions outside the meeting, feel free to just email me or call me, and I can walk them through it. Because again, it's I think we will be seeing in future meetings the effects of that paper we just talked about, of how we manage and deal with it.
Okay, thanks very much indeed. Thank you, Paul. That takes us to item 5. Now, this is quite a big item, and probably the best way to handle it would be if we could deal with each of the sections in turn and then perhaps take questions. So if we had cybersecurity audit first, and then we run through that and then take questions on that, etc. Lisa, Andrew, who's doing this one?
It's myself today, Chris. Thanks very much.
Okay.
Hello, everybody again. Good morning.
Good morning.
So, yeah, in respect of this report, you would have seen that clearly we've undertaken follow-up of previous work in this area. And I think everybody who is involved in any organisation is aware of the increase in cybercrime over the past couple of years and its ever-increasing demands on all sectors in which we operate. This report obviously has looked at the way in which Transport for the North has been managing and securing that. And you'll see in the report we've issued a high management action in relation to the penetration testing, i.e. testing the strength and security of your systems that are operated. And that was a point that was raised previously. And obviously, for good reasons with COVID and everything else in the environment in which we find ourselves in, resulted in being delayed slightly. But clearly, we see that as being quite significant, hence the high priority, in relation to the security over the IT accessibility and network. There were some other assignment management actions you would have seen in the assignment report in front of you, which clearly, again, as with the high management action, have been agreed with. And what you will have seen on the high priority, a date for that has been included, as well as being Monday, the 28th of February. So clearly the results of that will be very informative, maybe providing any further guidance that TFN might need to take in respect of security. But I'm very pleased to say, good dialogue was had with our IT auditors who delivered this. Clearly the actions, as you can see, extend until the 31st of March 22 in terms of completion, and one of them in terms of an observation was already completed at the time of the audit. So very happy to provide any other context, or if not, any context that management wishes to provide.
Okay, anybody want to say something about that? Yeah, sorry. I saw a hand go up then, but I can't see it. Can you see it, James?
It's me, Chris.
Oh, okay, Kevin, thank you.
Yeah, just a call. I think there's a, Lisa, I think there's a typo on page 2 in the final bullet, but
okay.
it may be the way I'm reading it, 'cause it says something like, the risk acceptance and mitigation is not reviewed on a periodic basis. I think it should be is reviewed.
Okay.
Or is it?
Oh, it's for the IT specifics, I think, if I remember rightly.
At that point, they were basically, we had them as risk acceptance items. Sorry, apologies. I'm Kevin Willans. I'm the head of IT for Transport for the North. Just thought I'd help with the interaction. We basically had a risk acceptance form, which was accepted by the risk manager at the time. But it's been a recommendation that that's now an ongoing review rather than just a one-off section. So that's been added into our risk system Predict, and will now be performed as part of an annual and monthly review as well.
Okay. Yeah, so the not is deliberate on that occasion.
My second sort of question was around the action 1, the penetration testing previously recommended in September 2020, and it hasn't obviously been followed through by management. I was just wondering why we haven't picked that up here at this particular committee. I don't recall it coming through as a sort of on the tracker as an outstanding action that's not being implemented.
We had it basically on the previous tracker. It mentioned that we'd got assurances from our network support teams that provide the support of our environments within Manchester and Leeds, and that we were following on the audit once we were able to get access to the actual sites themselves. So we had assurances from our suppliers, and we were waiting for that audit to be then performed once we were back on site. So it was included in one of the highlight letters that was previously provided.
To committee? To this
yes,
committee.
To committee. Yeah.
Right. Okay, I may have missed that then. Thank you.
Okay. If at this point I could just mention that Graham sent an email with a number of questions around internal audit items and other things. And I just wanted to see whether Graham wanted to come in at all on that, or if not, whether you wanted to consider perhaps attaching his questions and the respective answers to the minutes. You don't have to answer that now, Graham, but if that's something you want to do, then that's fine too.
Yeah, Chris, thank you. Happy to share the correspondence. I think personally with audit reports, I always find the opportunity of dialogue in between meetings really quite useful. So thank you for entertaining me and providing a bit of additional information. I think one of the points, and Lisa mentioned it in terms of this particular audit. One of the things that always makes me feel a little nervous is as conditions change, and it doesn't really matter which threat we're talking about, but as conditions change, every organisation needs to find ways of managing risk, not succumbing to that change as a reason to delay, in this case, testing. I'm not in any way suggesting that the delay was unavoidable, but it's just a general point, I think, for committee to watch out for, is that we need to be maintaining management across our risk landscape as inevitably conditions change. And I think this is a really good example of where we had perhaps intended to do something, But changing conditions meant that we couldn't do it in the way that we'd originally planned to do it. And, you know, to Kevin's point, I think it would have been perhaps better to have highlighted that to committee. I'm not suggesting it wasn't reported through, but you know, I wasn't aware of it as an outstanding point when I read it. But again, thank you for providing the feedback and a very timely piece of assurance work for the business, I think.
Could I also add to that as well, though? I agree that obviously the delays and so forth of the penetration testing was of an impact, but actually the level of risk, because we were no longer on those sites, was actually smaller. So yes, I agree, the action was still pertinent and required, obviously, but unfortunately we couldn't get on site. But that level of risk at that point was significantly less because we have nobody on site, no physical infrastructure other than networking to get us onto the internet at those locations. So the risk level was significantly lower as well.
Okay. Thank you for that clarification. Any further questions on this particular item? No, I don't think so. So should we move on to progress report?
Gives you a position statement of where we are in terms of year-to-date performance. Clearly covers the one assignment report I've just covered, and it pulls out the themes in terms of control observations that we've identified through the year. So again, you'll see those very much related to IT and governance effectiveness that have been delivered to you before in terms of those actions relating to governance areas of development, which I think is, you know, absolutely robust in terms of its commentary there. What we demonstrated throughout this progress paper is a number of briefings that we've been sharing in relation to a lot of HR matters, obviously surrounding returning back to work placements, etc., in terms of all that, which clearly are here just for information. And we just alluded to some of the non-exec director events that we've been running as well in a virtual world through Teams and the like during the last period. So progress paper really there for information. Okay. No questions? As it's a statement of fact, that's great. And then the next paper, Risk Deep Dive, and this is really useful actually. It's been pulled together by a number of colleagues within the firm, and obviously as an organisation, you're very good at going down and looking at risks, etc. in that regard, and it's very much a document really in terms of some considerations and approaches that we've seen utilised, a bit of benchmarking about how you do things and how you may want to consider to do things in the future. As things evolve, and similarly with a new chair in terms of the committee responsibilities moving forward. So hopefully you found that a useful read. It's a takeaway to be used at other organisations as well. So again, happy to take any comments you may have in respect of that. Okay. Nothing specific. No,
Chris,
that's it.
Chris, you're on mute. Chair, you're on mute there.
Still mute.
Still on mute, Chris.
He's struggling to get himself off.
Just while he's in, if there's no further questions, can we just move on then, please?
Perhaps use the chat box, Chris, if you want.
He's struggling to come off mute. Lisa.
Perfect. Yeah, shall I move on to the proposal? Yeah, of course I can.
Yeah.
And if there is anything, we can always go back clearly. So
Yeah.
the last paper from Internal Audit, starting page 81 of my pack, is the draft Internal Audit Plan, and including in which is the strategy for obviously the next period. This has been pulled together from discussions had clearly with colleagues, Ian and the like, etc. And what you'll see in this document, section 2, is our proposed coverage for 22-23. And hopefully what you can see, it covers areas of regulatory requirements such as GDPR. It also covers areas such as payroll, health and safety, ED&I, and follow-up, as well as clearly a risk maturity review, bearing in mind, obviously, you've changed the predict system for risk management and changes in terms of risk manager and owners within the organisation as well. Now, I think it's very representative. I think it provides comfort across a number of systems of areas of control across Transport for the North. And you'll see that in the context of the audit strategy later on at Appendix B. But the purpose today really is to get assurance as to, are you comfortable with the scope of the coverage that we've proposed here? Are there any areas that you feel as a committee you require assurance on that aren't included? And any comments you may have, please.
Chris, are you back?
Yeah, I'm back now. Yeah, thank
Excellent.
you. Thank you, Keith. Yeah, so we have got a question from Graham, so if we could bring him in, please.
Yeah, hi. Thank you, Chris. As part of the engagement with management prior to the meeting, I think one of the outstanding questions is how comfortable are we with September being an appropriate timeline for GDPR? Again, given the increased threat associated with cybersecurity, the fact that we haven't yet, but we're soon to get the results of the penetration testing. Not not to do a piece of assurance work, but to have it as advisory, and B, to have it in September. I just wanted to challenge the thinking around that, I guess, in terms of risk prioritisation.
Is it worth bringing Julian at this point, Chris? I mean, I think the timing is probably flexible. I think the nature of the audit is flexible as well. I mean, this is a proposal for an audit plan. You know, GDPR was an either or with cybersecurity this year, so it is something that needs doing, and if we're going to do it, then there's no reason to delay. But I guess, Julie, it depends on the team's readiness, and I know there's a lot of changes going on at the moment, so I don't know what your thoughts would be.
Yeah, I think, Chair, I don't have any objection in principle to it being sooner or more in depth than is proposed, and I think this is something that in our response to Graham that we said we could consider at this meeting. Yeah, our data protection officer has been cited on the fact that this is coming down the pipeline. You know, obviously there is a lot going on at the same time, but you know, if clearly there's a view that should be sooner and in more depth, then you know, I wouldn't object to that.
Okay, I think it feels as though we perhaps ought to be doing that sooner rather than later. So could that be brought to the top of the list, perhaps?
Yeah, we can agree with management of timing. We'd sort that outside the meeting. No problem at all.
No, I think that's sensible. Thank you. Yeah. Kevin?
Yes, in the same vein, really. It seems to me that we could just flip the first two, couldn't we, in terms of the timing, the timetable, particularly as there's a proposal later on, isn't there, that's going to board around the risk matrix changes. So by the time they've embedded, it seems to me that, you know, if the risk maturity advisory review was later in the year, that might make more sense and in terms of chronological flow, but hey ho. The other thing is that we're already seeing, aren't we, today, increased warnings about the Ukraine situation and cyber threat. So I think Graham's points are well made, and I think, you know, we probably can't be doing enough to provide assurance around that whole area at the moment.
Absolutely, yeah. Okay, I think there's a general consensus there on that. Okay, are there any further questions on that particular item? I don't think so. We can move on to the next one if you like. Okay. Okay. Lisa, are you going to finish?
Yeah, I had your problem that I couldn't get the mute button to.
Yeah.
Apologies, people. Everyone there, like, please hit. So yes, the last paper I think is important in terms of giving you, as a committee and also management, assurance over the internal audit services of RSM. So every 5 years, in accordance with our standards, we commission an external review of our internal audit methodology, our compliance therewith, and approaches of good internal audit governance. So last year we tendered and appointed Grant Thornton to undertake this 5-year review. Previously to that, it was actually the Institute of Internal Auditors. And what we summarised here is the approach, the strengths that came out of it, the overall positivity of the review, which we're very pleased to have received because it was very in-depth and quite intense, looking at my files as well as colleagues all across our 600 plus clients and range of partners and directors, so it gets national breadth as well as local breadth. So obviously I was interviewed and, like I said, working papers and everything of my client work reviewed and scrutinised on a sample basis. So very pleased with the results. And again, thank you to clients who contributed in terms of survey responses as well. But I thought it's really important that you receive that because it gives you comfort. The auditors actually do get audited. And we do go through sometimes the pain that your organisation will go through as well. So it's here for completeness, openness and transparency that we've gone through a due process. Thank you.
Thank you. Any further questions on the internal audit section? Any further comments, Lisa? Are you happy?
No, that's everything for myself today. And like yourself at the very beginning of the meeting, can I just formally wish Ian the best for the future?
Good. Thank you for that.
Thank you, Lisa.
Right, okay. Let's move on to item 6 then, which is external audit. I don't know, is Karen Campbell?
Yeah, I'll take the papers if I may, Chair. Speak very briefly to both of them actually, because I know members of the committee will have read the papers, but the first of the 2 papers is our progress report. It just confirms for you formally that we have completed our 2021 audit work as far as we can at this stage, and you will see that the annual audit report is on the agenda for you to see as the next item. The only part of the 2021 audit that's outstanding is in respect of your submission to WGA, that's the whole of government accounts. Those of you who are involved in audit committees in local authorities will know that there's a national problem with the whole of government account submission process, and that we are all still waiting for Treasury to tell us what they need, and then we can go ahead and do it. Interestingly, you're what is known as a below the threshold authority here at TFN. So once they tell us the system is open for submission, it's a very quick process, and there's actually not much work to do. So we will get that in as soon as we can once we are given the all clear to do anything. The report then confirms for you that we've started our 21-22 audit planning. We're still at a fairly early stage with that, as you would expect really at this time. There isn't anything we need to bring to your attention. We have had a couple of conversations with Ian, particularly around kind of going concern and the way in which the things are panning out for TFN now, but there's nothing at this stage that I'm particularly concerned about from an audit delivery perspective. And we will just bring an audit strategy memorandum to your next meeting, as we normally do. The second part of this report is national publications that might be of interest to you because you've got the responsibility for governance of the organisation. There aren't any that I particularly wanted to draw your attention to, although interestingly, there is a National Audit Office paper on here around cybersecurity, which has been written specifically for audit committees and which you may find helpful in the context of the earlier discussion. So that's really all I was going to say on this paper, because as I say, it sort of closes 1 year's audit and doesn't quite open the next year because we're not quite there yet.
Okay, thank you. Yes, just to say thanks for the extra items that you've appended there for information. They are helpful, and hopefully, as you've brought out, the cybersecurity item there's worth a look through. Okay, any questions? Yeah, I think Graham's got one.
Yeah. Thank you, Chair. Just on the list of publications, which I thought was a fascinating source of information. Anyway, there is a specific publication on there around value for money. I haven't had the opportunity to digest it. I just wondered whether you felt, in terms of value for money process, whether that was a reflection of what TFN already did, or whether there was likely to be some learning in terms of how we do it for the current year.
A classic there of trying to look at the papers on the screen whilst also get off mute. So our assessment of TFN's value for money in respect of 2021 is in the report on the next item on the agenda. And as you'll see, we haven't raised any particular concerns at TFN. We did identify a risk, but we then subsequently did some work and satisfied ourselves. So I think overall, I'm satisfied that the organisation's got appropriate arrangements in place, but that, of course, doesn't make the challenge that you face in terms of your financial position any easier.
Okay, thank you.
Okay, that's reassuring. Thank you. All right. Any other questions on external audit? No, well, thank you for your update. Thanks very much indeed. That now takes us to item 7, Treasury Management. And I think, Paul...
Chris, sorry, can I just come back in? Do you want me to
of course you can,
the annual report? So the second of our 2 reports that's on your agenda, which is the annual report, Auditor's annual report, is the report that you're required to make publicly available from us to confirm that we have done everything we need to do in terms of our audit, and to make available to anyone who's interested a kind of summary of what the auditor thinks about what TFN is doing. It summarises at a very high level the work we do in respect to the accounts, but it does provide a much more detailed commentary around value for money, which is the in respect to the question we've just been asked, really. It covers 3 areas: financial sustainability, governance and decision making, and then what TFN is doing around the 3 E's of it, improving economy, efficiency and effectiveness. We have concluded that although we thought there was a risk at the start of our work, if you like, in respect to your financial sustainability, we have concluded that actually you do have appropriate arrangements in place to manage your position. I'm not going to go through all of the detail in the report, but I do want to stress the caveat that we've made in here, and which was referred to earlier, around the fact that having faced the reductions in core funding, and we've worked our way through how you've responded to that, it remains our concern, really, that you cannot continue to rely on reserves to plug that gap, and you do need to address the position for the long term. I guess that means I'm going to repeat the line I just used, really, which is that although you've got good arrangements in place to know what you're doing, know where you are, and know what action you need to take, it doesn't make it easy to do. So I just repeat that for you, really. The rest of the report covers the areas around financial planning and monitoring, governance and risk management, and the arrangements that you do have in place. I wasn't going to talk through that in detail, but I will take any questions if there are any.
No, I can't see any questions on that. Oh yes, sorry.
Chris,
go on from
Chris.
Kevin. Yeah. Go on from Kevin.
Yeah, just picking up on that reserves. So the discussion earlier with Paul as well. I guess we are where we are, aren't we? And so we're probably we're going to have a repeat sort of conversation on this in 12 months' time, aren't we? Is the likelihood. So I guess there just needs to be we need to capture this somewhere in the risk register, I guess, don't we? Ultimately, and the board need to acknowledge that. But I'm not sure what sort of mitigation additional mitigation we can add to those that are already in place. So I suppose it's just a recognition that that this is the situation that we find ourselves in. And unless the reserves drop below 2 million, then I would have thought that we're still going concern and financially sustainable.
And I think it is worth saying, Kevin, the reserve level that was set when TFN had turnover of 70, or was expected to have considerably more expenditure going through than it has now. So the process that we went through, both internally and with the department, to land on that 2 million figure, if we went through it again, I suspect we'd come up with a lower number. Now, that's one of the things that's mentioned in the board report that Paul referred back into earlier, that we need to go through a process to have another look at the reserve levels that we need, given the reduced activity in the organisation. I think we have been caught slightly as well. There is a kind of flank here that we need to be aware of, that, as Paul says, the levels of reserves that we had accumulated previously were used by the department as a reason for cutting in year funding. So there's a little bit of damned if you do and damned if you don't floating around in all of this. But as Paul said a couple of times, we can only play the hand we've been dealt. I think the reserves position at the moment, on the basis that the business planning process that Paul referred to earlier addresses the things that Karen's just been talking about, in terms of we know what actions we need to take. We just need to make sure the organisation now takes them. Then we should be able to get on an even keel at least until the next CSR. Now, at that point, it is going to be dependent on the funding allocation at the time, what happens next. But we have got a little bit of that anyway, because as Paul said, it's a 1-year settlement, and therefore we're hand to mouth actually at the moment, which actually makes things like doing things in a value for money way more difficult when you're on short-term arrangements all the time. But you can't commit to 3-year contracts if you've only got 1 year of money. It's not a sensible thing to do.
Okay. Have we got another question?
Keith,
Keith,
just picking up on the point that Ian said about going to the board with possibly a reduced figure. I would imagine the board would be looking for this committee to make a recommendation on that if it was going to be the case. So something we need to consider in the future, perhaps.
Okay. Yes. Thank you, Keith. Right. Before I cut you off again, anything else to add?
No, I think I'm done there. Thank you.
All right. Okay. Thank you very much. Thanks for the audit update, the external audit update there, Karen. And that now does take us to the Treasury management strategy. And I think, Paul, you were intending doing that one.
Yes, kind of. It's quite a lengthy report, the Treasury Management Strategy, and it's been included in its entirety. I think what I've tried to do is highlight in the report and state the fact that really there's the majority of the document is as per the previous year. There's been an update. There are sections updated around economic outlook and interest rate forecasts, but those are the main areas that have been updated that you would expect to be updated anyway. I did consider this time round thinking, is this the time that we actually do a completely refresh of the strategy and make it more closely aligned to the size of entity that we're going to be? And I think I felt that's probably the step that I will take next year. I think when we're a lot clearer on what size are we, what's our anticipated cash balances that are coming through core, because they will be substantially less than what they've been to date. So I think the opportunity that Treasury presents will be significantly less, certainly from a yield perspective, although arguably the yields are going up, but just the cash balances that we'll hold will be less. So I think the strategy needs to be pared back in future years to be a bit simpler and more closely aligned to the balances that we're likely to have, but still maintaining the level of security. Clearly we can't be exposed to risk in relation to any potential loss, and hence we prioritise security and liquidity over yield, and that is something that we would not be proposing that we would change. So happy to take any questions on the detail if I can answer them, if they're wanted. But I suppose I'm just marking an expectation to revisit that strategy in due course.
Okay, I can't see any questions, but clearly, what you're saying, Paul, it does need a revisit, and given the circumstances as we now find ourselves in, and I guess the committee just looks forward to that reshape further down the road. Yeah,
I think just to summarise it, we've effectively placed all our funds have been either with Barclays, our operating bank, or with the DMO. DMO being effectively AAA rated debt, it's UK government, so it's which has given us ultimate security. But at one stage, I think for a period of a week last year, there was a negative yield. But it's marginal. So whether it's a marginal negative yield or actually a marginal positive yield, it is all relatively small, and it's actually outweighed by the charges associated to doing it. So that's where we were in the year. The projections of rates don't indicate that we're going to start going anywhere, to a relatively modest yield that would be, beneficial to us to invest significant amounts of time squeezing yield out. So I think we're going to be faced with a fairly quiet treasury management period for the foreseeable future, I suspect.
Okay. Thank you, Paul, for that update. Very helpful. Thank you. in that case, can we now move on to item 8? And I think, Julie, you're going to take us through the preparation of the annual governance statement.
I am, Chair. Yes, thank you. In a similar way to how this was approached last year, this report's presenting the draft annual governance statement for this year with a recommendation that committee receives it and reviews it and provides any feedback it may want to do prior to publication in May of 2022. The final document, as last year, will be circulated to committee before it's published, so all members have the opportunity to make sure that it meets your requirements. As the report sets out, the Accounts and Audit Regulations 2015 oblige TFN to carry out an annual review of the effectiveness of its internal systems of control and to publish a report of that review. That has to be published before the beginning of June, along with the Statement of Accounts and the narrative statement. So this year's draft statement, which is Appendix 1 to the report, has been essentially based on the one that we did last year, but we've also reviewed and updated it, and that process has included input from our senior officers across TFN and our senior management team. Fundamental basis for the annual review continues to be the SIPFA requirements, which are issued in its guidance delivering good governance, and the 7 principles which are contained within there. And each activity has been reviewed and evidence provided on the way in which TFN has conducted itself following the 4 principles which are set out in paragraph 3.4 of the report. So the key changes from last year, which are set out in section 4 of the report, are principally focused around the greater emphasis on the diversity and inclusion policy, which feeds into Principle A. It's further noted under Principle B that we've done further work to develop hybrid meeting technology and updating on our other engagement aspects from TFN. Albeit in terms of the hybrid technology, we need to notice the latest position on face-to-face meetings, the removal of legal COVID restrictions very recently, and that means that we may need to continue to revise our future expectations as to hybrid working, as that may become less necessary in the future than had been previously anticipated. A further change that we've noted is to revise the strategic transport plan with decarbonisation as a key factor, which feeds into Principle C, and under Principles D and G, the NPR work which we've been carrying out and the future status of TFN within that. So in short, the report is for receiving review and comments, if any, by way of feedback. If there are any specific questions, we'll try between us to respond to those today. If not, what we'll do is to collate those, pick them all up and respond to members after the meeting and before publication of the statement in May. As I've said, it'll then be included into the statutory accounts, which are to be confirmed by the 30th of September and formally signed off by the Chair and Chief Executive, but by then it will have been scrutinised and approved by the Audit and Governance Committee. Thank you, Chair.
Thank you. Any questions about that process? No. I think we're just reassured that it's underway and we're moving forward with it. So thank you very much for that, Julie.
Thank you, Chair.
Okay, that takes us to item 9. This is the Corporate Risk Register. And I think, Daniela, are you taking us through that?
I am. Hi, everyone. I just want to introduce myself to anyone I've not had the pleasure of meeting yet. My name's Daniela. I started TFN as the risk manager in January. So in summary then, in terms of the report, I think it indicates that we continue to monitor risk within TFN. We have sort of a big priority, a large priority going forward in the next couple of months to revise the risk register. We went to January at board. We got approved deferral for the corporate risk register from March to the end of June due to there's a number of changes and comprehensive changes that are required to the corporate risk register in terms of business planning 22-23 and also the reduction in the funding allocation. So the sort of main priority is to have risk reviews with the individual business areas to discuss sort of new risks emerging and update the risks that are there at the moment, that are existing, and then update the corporate risk register in line with TFN's objectives. So that's one sort of phase of the report. The other one, obviously, we'd like to move to the 5x5 matrix, implementation of the 5x5. I think it's probably a good time to do this right now because of the comprehensive review of the corporate risk register and business planning. A number of the risks will require reassessment and looking at in more detail. Obviously, once the implementation has gone ahead, we'll then look at training for all staff across the organisation to ensure support's there as and when required, and they understand and they have the knowledge that's there too. Does anybody have any questions on the matrix or?
I can't see any questions.
Sorry, Chair. I just wanted to come in and say it is going to be a difficult time going forward to fully understand what our risks potentially are likely to be. It's a very changing picture out there, funding-wise, and with a number of colleagues who we've already said are likely to be leaving the organisation. I think it's just going to be a suck it and see situation, for want of a better word, going forward. But I'm sure Daniela will keep us up to date and keep this committee up to date.
I will do, definitely, Keith.
Okay.
Hi, Kevin. Did you have a question, Kevin?
Yeah, it's a question really around the matrix, which seems sensible to me in terms of moving to the 5x5. I suppose it's a plea really, Daniela, that perhaps at our next meeting, once this has been sort of signed off by board, could we have a little bit of a walkthrough in terms of how we're supposed to sort of interpret some of the detail, and particularly the timelines against the various levels of risk?
Yeah, that's
because I'm not sure I fully understand the linkage between sort of low risk and low level of time, and conversely high risk and high level or longer periods of time. So I think it'd be just useful to see what the correlations are there that you're proposing.
Yeah, that's no problem, Kevin. We've also spent a lot of time looking at the cost element of it, so to ensure that it links in with TFN's funding envelope as well. So what represents a low and what represents a very high. But yeah, I'm happy to go through that.
Thank you.
David's got his hand up, Chris.
Okay, David. Yeah.
Just a quick one. I just want to second that what Kevin said. I very much appreciate the run through of you on whether we do it in this meeting or outside of that. I very much appreciate it too.
I'm happy to set up a separate session on that, and we can go through it and have a look at them.
That would be great. Thank you.
No problem.
Okay. Yeah, so it looks as though we do need a bit more time on that for the next session. And I think it's worth perhaps, even if you have one outside the session, to just run through the key points on the risk register for wider membership, which will be really helpful for next time, perhaps, Daniel.
Yeah, that's fine, Chris. No problem.
Okay, great. Thank you. Any further questions on corporate risk register? No? Okay, well, thank you. Thank you for providing it.
Thank you.
That takes us to item 10, which is election of new committee chair. And I think, Julie, you're going to help us with that one.
Yes, thanks, Chair. Just very briefly, just to explain what the process will be. So following your announcement that you're stepping down as an independent member and chair of this committee at the end of your notice period, which expires in April, we'll be bringing a formal report to the committee's next June meeting, which will be in person, and that will invite the committee to elect a new chair. That meeting will be opened and that particular item taken by Councillor Little in his capacity as vice chair, and that will invite nominations for chair from the independent members, and will be a matter for members to make that selection. So hopefully that clarifies how we'll deal with that at the next meeting.
Okay. Any questions to do that? Keith, was there anything you wanted to say on that?
Thanks very much, Julia. And yeah, it will be important. We can go forward. I've had one registered interest lodged with me at the moment through Graham. and he sent his CV and stuff like that, supporting documentation. So that will go forward to the next meeting, and thank you, Graham, for doing that. It is important that we have an independent chair, and just by way of perhaps closing this down, Chris, I just wanted to say it's been an absolute pleasure to work with you as vice chair. I think it's probably about 5 years now, is it?
4 years it is, yeah.
4 years, yeah. Well, time drags when you're in these kind of meetings. I thank Liam for nominating me in Leeds. I looked at Liam and I thought, you might make a good one, Liam. And he says, no, I've already nominated you, Keith. So that was fine. It's been a pleasure to work with you. And I think what you've been able to bring to us is that clinical aspect of looking at, as I have to say, people like Kevin have as well. It's always in depth and sensible stuff that comes forward. And just before I sign off, obviously it would be very remiss of me to not mention Ian. I've worked with Ian now again from that period of time. We've had lots of conversations outside of these meetings when there's been issues that's been of a concern and we've needed to consider and have chit-chats about. But again, Ian, it's been an absolute pleasure working with you. I think you've brought an awful lot to us. And to both of you, whatever the future brings, good luck to you. And, it's been great working with you. And I'm sure we'll continue and keep in touch if ever we can do anything to help. Thanks.
Yeah, well said, Keith. Well said, Keith.
Well, thank you very much indeed for those kind words, Keith.
Yes, thank you. And I would just like to reiterate the comments that Keith has made. Thank you very much, Chris, for the work that you've done chairing this committee. And thank you, Ian, as a fairly new member of this committee. I've only been a member for a couple of years, but thank you for the conversations I've had with you and the support that I've had. Thank you very much indeed to both of you. And as Keith says, best wishes for the future, whatever you do. So thank you.
Thank you, Gavin.
Thank you. Much appreciated. And if I can just thank all the officers and members and for all the commitment and input that they've put into this meeting. Very appreciative of that as chair. So thank you very much to everybody who's been involved. Okay, well, just to finally finish off the meeting then, just to mention that item 11 is the future dates. Well, our next date, as has been already mentioned, is in June. It'll be Friday the 10th of June, and it's going to be a face-to-face meeting in Manchester, the exact venue to be advised. So if everybody could just please make a note of that in the diary. And that formally brings us to the end of the meeting. So thanks everybody again for attending, and goodbye.